right, everybody, we're back on a Thursday, and as I said, we'd get the books right out of the way. So, the first two people that were in today, Costa and Kev, let me get your full name there. They were the first two that were in today. You guys are the winners. Costa and Kevin. Costa Mooney and Kev 3L ELEV. What's going on, everybody? Kind of another eventful day here. Crypto looks like it's in a bad position to be doing anything but continuing going lower of what it's been doing, especially the last 3-4 sessions. Markets are down again today, a couple hundred. Nasdaq's down 200, looking like it's scraping the lows for the session. And we're going to have Mitch Ray come on a little bit. Get Mitch Ray here in about 15 minutes. Mitch was up late last night. I'm sure. A lot to get to, of course. And what are the possibilities now? Because look, I've been saying bump stops on Ethereum. Ethereum's the main market to focus on. And the stop for me was about 1480. So you're there. What are you going to do? What can we expect if this is going to fail 1480 now? Probably, I'm not going to keep repeating myself one more time. I'm thinking then the larger pattern that we're still looking at needs to be retested. If this area is not going to be of any development, the check back, the secondary move that we anticipated back here a week, 10 days ago, something like that, if that's not going to do anything for this larger pattern in advancing, essentially what we're looking for is some kind of type 1 advance. I guess the news came out, sell the news event, I suppose. But from a harmonic price action development standpoint, there's no more room. We can't let this thing drip down, break the trend line, and just say everything's okay. If anything, you under the 1480 is just then you go to retest the pattern zone. And for me, that would be stretching out the entire range of consolidation of what's possible back down to retest those lows. Are the markets, look at the markets, look at NASDAQ. Down 200, getting smacked down right now again. And it looks like a couple of the key stocks we talked about on Tuesday, Microsoft, Apple, are going to be the ones that drive this down to retest those lows. So is this going to be the theme? Is everything going to have to go back and retest June lows? Is that what it is? It's absolutely on the edge. We've been on the edge for a week, and I don't like trading on the edge. Trading in the zone, it's a good place to be. Trading on the edge, bad place to be. And that's what's at stake right here. When I say, and yes, last time we got into the whole, what does it mean when you say more time? What you're really assessing is like, where are the possibilities for this major stabilization, major market low, if it's crypto, if it's tech stocks, if it's whatever. And all of this price action, especially today with NASDAQ, I probably should jump over to there real quick because that's leading this. That's really, I think more than anything, it's because you're seeing NASDAQ getting crushed. Why is NASDAQ getting crushed? Because interest rates are spiking. Maybe we should dial it back like that. Really quick, this is probably the most important chart. Everyone should be looking at this chart. Actually, these two charts. Go to the 2-year chart. This is the problem with today. This is why you're seeing what you're seeing across the board with not a lot of relief. This is the 2-year chart now trading up to almost 387. And talk about inverted versus the 10-year. Okay, 10-year is still 346. Hasn't fully broken out yet. That has to play catch up at some point. And again, we've talked about why, say, 366 on the 10-year is the likely target. So if that pressure is going to continue, interest rates are going to spike here. That's what's going to be the driver on the market. It's and you're in a real a sweet spot in terms of that kind of momentum for that position, for that trade. Not necessarily think it's a positive thing for equity prices, but for where you are to kind of finish this accelerated rush move, 366 at the hop level, that, and you need to get an overbought reading. And here it is. I think we talked about this last week, maybe it was Monday, but coming into that overbought zone on Harmonic Strength Index on the weekly was a starting point, but still 2-3 weeks until that could even pivot out. And that still says higher. That's the pressure. That's 10-year, but the 2 years the problem. I think that's the real problem with what's going on currently. People are afraid that short-term rates will continue to spike, and we connected some dots last week on this chart where this is now pretty much at 482, the 886, maybe call it 480 on the 2-year. That looks like a likely objective. It's essentially a 1618 off of this little move from 2018 all the way down to the bottom. Now that's like a thrust 1618. As long as that continues and until that is fulfilled, probably that's the main driver for everything. So, we're trying to target where the likely objectives for all of these formations can come together. I think with the rates being such a fundamental chart and that squeezing tech stocks primarily, that's why you're seeing the action you're seeing. It's up big. I mean, it's a big move in rates. Really is. And you don't get rates to do things like this. This is why. Yeah, and even look since August, beginning of August, it was 280. Now you're 387. Big shout out to everybody in the chat. Thanks everyone for showing up. We'll bring Mitch Ray here in a few moments. He and I will talk about the markets, talk about Vegas, try to figure out, how, when, where, why, what's this going to do? Because at this point, your biggest fear is a massive spike rate. And if that's started, so be it. If that's what we're seeing here, and even since the June correction, you're already at essentially a 1618 of that rally. There's the 1618 at 388. So look, if this thing starts popping another day or two, even above this 1618 swing, here it is again. You could trace it out as a crab pattern. I guess that's a butterfly because that's at a 786. Well, either way, your 1618 metric here, essentially where you are immediately, it's a touch higher. Call it 388. But if you see rates on the 2-year spike to 390, 395, or even, click anywhere above 4, then that's probably the main issue. You're getting a dramatic spike in rates, which will bring in the pressure. So translate that. Sorry about the picture there. And that's not, I got to switch that up. No, this is the one I want. So then bring it back into relevance of what we have been talking about, especially Microsoft and especially Apple. Here's NASDAQ 100. We know that has some patterns back at 11,800. I think that's a stone's throw away. But the easier ones to see and the ones that are going to drive this next move down is the situations like Microsoft. Okay, now almost down to 241.60. We were saying that for a while. Once that this got into full return phase, and a lot of that was because not only we broke we hit our minimum objectives, but you took out some trend lines on the way up, took out a pretty aggressive reaction trend line, and had HSI. Even if you waited a few days, return phase clearly set in, and now you're almost at the point where you can hit structural minimums 1618 at 241.60. If not lower, we start to look for where's confirmation. I want to look under 241 for confirmation on Microsoft. Not there yet, and it does look like it wants to come back in. So, you wouldn't want to see HSI come down into the zone. Look at amplified. All right, that just went back into the oversold zone. So you're in that spot where RSI and a lot of these metrics are going to flush, and into tomorrow, Friday, Monday makes a lot of sense. I mean, you're $3-4 away. You 241 could get hit today, but it's the flush area right into here that I want to see. That's going to tell us a whole lot. We still need to drop in, and so as low as 220 would be, a big spot for the market to check for Microsoft or Apple, because now you're talking about trying to take out the big boys. And Apple, since it did this really tight type 1, type 2, it came down off of this crab pattern. That was the summer rally. That was it. Formed a beautiful crab pattern. I talked about this last time. Why 175 was everything, and now 131 is the retest. That's where I would look for that pattern, much like Microsoft, to get retested. You're squeezed between zones, in my opinion. This hop level at 175 off the bearish pattern, and then the bullish zone of 131. And you continue to kind of just trail down here with not a lot of conviction. Here's the, check out the weekly. Even in a static weekly, I'm not saying anything. Your nightmare scenario, and I think what a lot of people are expecting, is the big drop to happen into October where you take out June lows and then you fall down. And I'm not saying that. I'm saying let's just take this distance. Let's go from the obvious daily zones. The weekly, yeah, the weekly does not look as bad as it seems, but it's pretty clear. If we're range bound, even on the weekly level, that's essentially our proposition here. And we're heading back down, no doubt, within this range. You come back to 135, 131. So this is where the return phase on a lot of these patterns. Here's Apple, wants to come back and retest its crab pattern from, this crab pattern that, like a lot of them that formed lows in June. Here it comes now to be retested. And again, when you get like half a weight down there, it's almost like a magnet. Now I'm watching this because this actually, it did almost a crazy type 1-2 really fast. And this has been the tough thing I've seen with a lot of these patterns recently. They're bouncing off of the levels without giving you a confirmation. It's tough, but it's happening. The target one was 152.62. The low there was 152.68. Are you kidding me? And then it did a 3-day, this is tough to see, but it did a 3-day check back where the 1618 of that move is at 165.72 and the high was 165.68. Was that what that was? No. 164.28. We could still say Apple potentially is in a type 1 reaction, but no matter what, taking out these new lows and still under the weight of the downtrend, I'm going to say this is going to continue at least against that pattern down to 143. You're cracking levels now. All those stops I was saying, move those stops. Yeah, they're getting taken out now. Now they're getting to the point where, okay, yeah, Apple wants to go all the way back down. Microsoft wants to go all the way back down. And then the other one, Tesla, which recently popped, and I'm still treating this the same way. Here we are with a type 2 deep crab on the daily. Pretty interesting pattern. And this is perfect material, 1-2 material. So you guys tell me. I don't know why it was up 13 yesterday, but there's type 1, bang, coming back. Terminal bars at 311, maximum hop at 322. Where's confirmation though? Nothing yet. No confirmation for that type 1, the type 2. But look, here's where the pattern completes. There's your confirmation. All that confirmation at around 304. And so that really started, that check back started like there and down to target 1, which was 272. But now you're back into the zone. I would pay close attention to what happens here. Okay, because that's a perfect type 2. And what happens with a type 2? Okay, and is this a short opportunity with the market going down in a perfect type 2 against that daily where target 2 is our objective? 248. Looking for confirmation. It might float up here another day or two, but it's against that pattern and then the weekly. Okay, has this really nice bullish bat pattern. We talked about that. Pretty much said, okay, reactive mood is over. Can we get the return? And if we were really bullish on Tesla, we'd want to see it retest the pattern, give us confirmation, and then go. That's the ideal scenario. So if you can't get above the prior highs, you've got some things on the daily level, daily time frame that are saying you've got bearish situations here. I'm going to keep an eye on it. We'll keep an eye on this because if things like Apple and Microsoft are in their relative position and then Tesla's flashing kind of a 2 of 2 move, I can't ignore it. I cannot ignore the significance of that pattern. So I have to watch this secondary retest and wait for that weekly retest of the weekly pattern. One or two more, the other obvious ones that I've been talking about, which are on their checkbacks. Here's the Dow Diamonds again. We're back on the type 2 return of that pattern from June. So a lot of these patterns that set up, I've been saying this last few sessions, where the return phase that started the end of August, depending on the market, but still following a pretty much textbook harmonic pattern framework. That was a reaction over. Now back down. Minimum retest level 302 for the diamonds. That's like 30,000, just 30,000 plus or minus 1,000, not even plus 1,000. But give it 30,000 minus 1,000, because if things are going to get out of control where you're having a larger breakdown, you're going to see that under 28.8, under 28.5. And it looks like this on your weekly level. Okay, again, June lows, everything's June lows. Are we going to get this kind of a thing? Break the June lows. And then a second leg to begin there. That's the real proposition of what we're trying to get at, of what's going on currently. I think you need to see some kind of crisis. You need to see something. Maybe if it's interest rates, they need to go crazy for that larger breakdown to happen. But for now, with all the patterns I'm laying out, let's wait for those checkbacks, the retests. secondary retest, secondary confirmation of all of those patterns from June, July. Still fits within the framework, and a lot of this can be range bound. I'm just want to point out this stuff with the major markets because yes, the major markets are definitely weighing on the crypto, and interest rates weighing on the crypto. Let's take a peek back. Let me line this up, and then I'll bring Mitch in here. We didn't even mention Bitcoin, and Bitcoin still, for everything we've talked about, it continues to sit within its larger crab zone that we have been looking at for 4 months now. But if it's going to break down, it has to break down under last week's low, under 18.8, and then you got trouble. So you're scraping the lows here. Absolutely. Let me take 1 second. Let me get Mitch in here. And hold on 1 second. Let me dial him in. Get this. Okay, 1 second here, folks.
Hello? You hear me? Just stay on. Okay, cool.
All right,
All right.
everybody. We got Mitch in here. Mitch Ray, TA. I heard you had a late night.
Yeah, got 8 hours, man.
Oh,
Eight. Uh, Boots. Not the only thing that got me through it, I guess. And here I am again, waking up to uh, the market's puking, and yeah, no real surprise. I mean, there was like a 4 hour edge on crypto pairs, and daily was showing a bearish edge, and the macro looked terrible, and so you just can't really be surprised with what's happening today. And gold, I think is like a huge deal. Yeah, just kicking in the
well,
within
the
some.
rates, and I actually talked about this on Tuesday with gold that I felt like it had trouble ahead, and I think it's all about these rates, which I started talking about today. And I just this is where the spiking rate scenario can take shape, and and that will immediately impact things like gold, where if rates are going to go to 4.5, or close to 5 on the 2 year, then things are going to get crushed. And that's what's spiking. It seems like, okay, that's going to spike now. That's what's going to do. I don't know. Hey, everybody in the chat, give Mitch Ray a big shout out. After last night, I guess, did a marathon stream over his place, and then he and I in 2 weeks will be live doing a joint stream. I've never done a joint stream with anybody like we're gonna do.
Me
Um,
neither.
so that'll be in Vegas in 2 weeks, and with a live in studio audience, as they say.
Yeah, for
A-
real.
and will be a fun weekend. We're gonna need it.
Yeah,
Yep.
we are. And you were talking about how like it was like last week, but we should maybe have a clearer understanding of where everything's going. But leading up to the Vegas trip, which I think things are starting to do that. And you could definitely see that like on the cues. You could look at individual assets like Google puking, breaking its bear flag a couple days ago and still out of it. And I think it's starting to catch follow through. It is. My
Yeah,
God, look at
these
this
are
Google
running
chart.
at yeah, there you go.
Shoot.
They're running at the June lows already. There's Google. Oof. With June lows already, in sight here. Not even a dollar away, barely a dollar away and that's your proposition again with a lot of these is that you if this is if those June lows break, and then if we're going to just start connecting dots, and the June low is a B point, which for many of these were a 50% retracement, well, then you go into a bat pattern. And boy, that creates a second leg of everything we've seen. So you think we've been through it. That's why all these numbers and everything that we've been talking about for the last few weeks are so critical, because if this doesn't work out and this doesn't hold and you fail that kind of configuration, you just have to let that thing fall into where it's going to go, which is a lot worse than I think a lot of people even tried to lay out or even can perceive at the moment, because there is nothing. I mean, there's not an alternative, at least for me, that's a mild alternative underneath the current situation. And you see Alphabet,
There's no support, dude. It was all Federal Reserve intervention. That whole run was just artificial.
which is what it says, definitely. I mean, at that point, you break that point from the way that we look at all structures. That's what would have to be assumed, and that's you say, okay, you're going to give it all back. Here's Meta. Meta just did it. So
But
Met
yeah, someone was talking about it in Discord. Yeah, oh my god, dude, it's so close
116.
to yeah. Yeah, it's holding that March of 2018 valley. And once that breaks, bye bye.
Yeah,
You could go
that's
on 133. My God.
well,
It's
even
not, it's like at least it's at like stronger levels of support. Maybe you could look at that versus Amazon and Google and Microsoft that are like staring into the abyss right now. Because Facebook's got all those lows, but
yeah, but look at
whatever
that.
kind of comfort
Just
that would
draw
give
the
you.
all-time chart. Just draw all-time uptrend. A general. Let's see. I'm even tighten it up a little bit, and this thing is ready to do some kind of all-time retracement. It's been as ugly as
Yeah, it was like a,
anything
yeah, for sure. That's so bad. So we're an 886 from the
at
low to the
58
high.
bucks,
Yep.
60
Yep.
bucks.
Terrible.
Is
My
that
God.
possible?
Of
What do you
course.
think? Exactly.
Of course
That,
it's possible.
that's why this
Facebook,
failure,
dude.
you know,
It's like a dead platform. And like you could see with what did the CEO, right? All these big tech companies that made their fortunes and their money on their original product, they're all trying to pivot and go another direction, to the next thing. And Zuckerberg picked the metaverse, dude. And that was a failure. That was a scam. That was like The Sims, dude. Didn't happen, right? You go to NFTs too, like all these crypto things that were supposed to be, oh, that's why crypto's going up because it's the next thing. Well, NFTs volume down 99% on OpenSea. I think Rarible too. So that literally turned out to be just a big scam. And Metaverse 2 was just a joke. The technology is like a decade behind. If you want real metaverse, like AI and just beautiful technology, like you have like on your 3D or your your glasses, you want to be able to be in the metaverse. We're like a decade off from it being like not a joke. It's terrible right now. So why would Meta or Facebook with a dying platform, right? I mean, you had like 94% of like millennials were using Facebook in 2012, and now it's like less than 10% or something. Everyone's on TikTok or Instagram or something. Um, yeah, I'm just saying, like, how does this not go lower? If we're not even talking about technicals, right? I mean, just talking about the business model.
well, the downtrend. I mean, yeah, but the downtrend. There's nothing. They had that collapse early in the year, and it's been straight down ever since. And that's just a running correction where any levels that I have are like 116 from here, next stop, and then 60 bucks. And that's the whole proposition for a lot of these, where Microsoft showing some mandatory things it has to retest. Things like this have already busted. Then you go to the other ones like Snap, which
Oh my god, dude, what
completely lost it.
speaking
You
of
know, there's an
jokes.
886 all time.
Yeah, did it for sure. It's holding on to that low at $12 for real. I mean, the low from 2017 and, it's sitting there, but it's not doing anything.
Well, we're
Why
back
don't
to back to just looking at all of these IPOs that came out in the last decade, and I mean the last decade, and assessing, is this the first major cycle bear market they're all going to go through? Facebook, for example, Amazon's already gone through one. You know, went through one in the early 2000s, but is that going to go through another one? Because Amazon, you
jeez,
look at Amazon monthly chart, and
that's
again,
crazy.
take out the June lows, and you're in trouble.
Yeah. No doubt. I mean, that's where you're headed legit. There's nothing there. Like, it's straight up at $100 to 144 and straight back down. You just got a very successful back test of that 144 that was supposed to be support as resistance now. And yeah, I don't know why you and oh my god, like go to the 3-day, look at the hidden bearish divergence. It's terrible. I mean, it's like I think there's a very high probability Amazon's going to see $100 again, which is a weird number because of the split, but yeah.
Yeah, I mean, I've had a few patterns up here. They're kind of ugly though, but it's still just maintaining this downtrend, and I think that's the other thing that when it failed in late August, a lot of these trend channel failures came up, tried to hit the downtrend and got rejected. I mean, not even close to breaking out on a lot of them, especially the SPY or the QQQ. Once that happened, the macro market went negative again on just in terms of generally where people were perceiving it to go. And then anything else that was trying to do anything is going to get slowed by this. And you also look at again the rate thing is that's a real problem for the first time in decades. That interest rate
Yeah.
situation, and that's that gets reflected in the major stocks like that or
And it takes time,
Tesla.
right? Because of earnings and stuff and affecting consumers. It'll
It
affect the consumers and then it will then affect the earning reports going forward.
it'll take time and it'll give people reason to dump. I mean, everyone's looking, okay, is this going to hold June? And then if it just fails miserably and just and slices right through June, yeah, I think you're looking at people saying, I'm giving up on the year. And this just pretty much probably slides into the end of the year, continuing to do most of what it's done throughout the year, which is go down, do a 1618 down and then bounce up 382. It's like this. We've done this a few times. Like, you know, there's your first move down. Basically, 1618 is like there, right there, almost there on the first time. Back up and then back down to 1618, and we're back up to a 50. And then, maybe we're in the root of another 1618 down like this. This is QQQ, where all right, that's your next kind of piece to chomp off on this next leg down. That's the only thing you're considering here. If this stuff gives way, you don't hold. I mean, and I've got a shark pattern here. I got a shark pattern right here on QQQs, two back to back. I mean, I have a bullish shark with a bat that both have responded and reacted, so it still remains a very reactive environment. But um, the steady breakdown, I guess, the failure to get above that that proposition, that downtrend, um, and then coming back down to the June lows already with not a lot. There hasn't been much change in the markets. There hasn't been a lot of hope or even increase of hopium for people to grab onto since the June lows. If anything, it's about the same, maybe a little worse. And now here we are trying to retest these lows. Are we going to hold? You're gonna hold these lows here without substantial confirmation.
You gonna hold the lows without confirmation? I mean, dude, all I'm looking at on the cues, there are two levels. The only ones that are relevant: 267 and $300 to 297. That's it. If you're below that level, there's nothing to even talk about. It's a straight up, straight down situation. And I mean, maybe if you get above $300, we'll talk. But then you need to make higher highs. You're not going to be doing that. I think like momentum has shifted back to the Bears, and you're breaking like kind of a neckline here. You just made today like the lowest lows since July 18th or so. And if all stays the same, I mean, of course, anything's possible. You could be making the lowest daily candle close in a month too. And yeah, you're just in a really bad spot. Like you're either short or in cash. You don't own the cues right now. That's not financial advice, but my God, dude, what do you need to see to why would you own this asset right now when the only thing historically that happens is straight up, straight down? So
Yeah,
that's my
281
take.
on the Qs still would point lower. 11,800 on the Nasdaq 100 is pretty much, that retest has to happen. Here's something I got out of, and I'm looking actually, now I'm looking the other way. Potential short. Where'd you go? Here's Uber. Okay, shark pattern on a daily. I find this interesting too, but this is still a type 1. It's a difficult one to read, but here you have a really nice reaction up to well above target 2. There's target 2 off the crab, and then you have a shark pattern. Now you have confirmation. So this is another one where pattern completes here, but there's your confirmation. So I'm looking at this um, for maybe wait for one bearish candle, looking for something, a turnaround in here. But there are a few opportunities on the short side where it's like, okay, that's pretty interesting. There's something like that, and even if we get market pressure, I kind of like Uber down in the low 20s, and I was on this since late June. 22 would be the secondary retest, and actually a really nice opportunity longer term. But you've got to go. This has to be the end of the reaction. If so, it's going to be a hell of a short term trade on the short side with the anticipation to return to retest again another pattern from June. So, a lot of the stuff that I'm looking at fits within the framework where these retests are almost, I wouldn't say mandatory, but ideal. Ideal.
Yeah, well, it's just key supports that should have held aren't holding, and you're breaking those supports. And so it's like the only thing left to do is to run to the next levels. And something like Uber, I could imagine the next level is going to be the lows. So, so I don't even look at Uber much because I mean it doesn't make money. I could not imagine. I can't believe it's like doing this, but it's rallying like this, kind of crazy. But such a massive downtrend. Yeah, man. There's like it's kind of interesting where your harmonic software is creating the X. I figured the X on Uber would be like March 29th's
Up
high.
here.
Yeah, and if that's the case, it's got a little bit higher to go.
But you do
And
have the thing with that is you have this, you would agree that even if you hand drew that, this move down from your, I don't have the XABC on there, but the A to B leg on the shark, or no, that's sorry, B to C comes up to the D. That has a low 1618. It's actually a 2.0. So the way the software finds it's looking for the best combination of the 886, as long as that minimum 1618 on the shark is satisfied. So for Uber, this rally from June, which makes sense, is a very impulsive 1618, actually 2.0 that links up with this smaller 886. That's why it's picking it out there.
hmm,
But you've got You've got the crab, you got the target two on the crab. You have this arrow two is another. That's just an HSI trigger that we use in the zones. But you've got a few things here where um, even this one, I thought this was a good one because you're back to back patterns. Even if and I am bullish on Uber, I would love to get this longer term at the right spot, but I think it's all the way back down to retest this crab. And you look at its all-time history as well. Check this out. Here's the weekly Uber back to back. Big deep crab up at 59, and then all the way down to $18 and $19 with that alternate bat. Um, but some bigger patterns down here, but all of them have to be retested. And this one also got rejected from the recent downtrend. So just looking for if I'm looking for reasons or opportunities, most of them point lower or require a retest like this does before I would even consider it. And again, the other one I started with today was Microsoft, which is that's like screaming to do its retest, and
Oh
because
yeah.
that's in both Nasdaq and the Dow. And if you know where this has to go to satisfy that pattern, it's 10% lower, 5% lower immediately, I would think.
Yeah, it's definitely like knocking on the door. I mean, we're talking on the weekly, you got 1 day, 1 hour, 1 day, 4 hours to go, but we're talking about a bearish engulfing candle will be confirmed on the weekly on Microsoft. Hidden bearish divergence has fully developed. In fact, you've gone negative on momentum for the first time in a month. And let's see, it will be the lowest weekly candle close since May 17th, 2021. So we're talking well over 1 year lows on Microsoft coming 1 day, 4 hours. 200-week moving average is around $212. So, and if you go to the weekly, there's no support. Nothing even makes sense. It's just like a joke.
No,
Parabolic uptrend is broken too.
yeah, we talked about this actually yesterday or on Tuesday what that whole deal was. This is just one big bat pattern, and
Nasty.
the June low was the 50% level, so that's your A to B level, and then you go to C, and then if that's your C point, talk to me at an 886. I mean, that's 157. You're trading 246. That's why this is even if look, this next retest is everything. I think it's everything for the market. It's everything for Microsoft tech stocks. But if this does just blows out the hop level or blows out this 220 level, then
Getting
then the
like
large.
getting some sort of like repeating. Like I'm hearing our stream somewhere.
Hold on one second. I don't know. Don't know. There's some
Am I
playback.
crazy? It
I
just
don't.
started happening like seconds ago. And I have you muted. Like I have the stream muted. So
Yeah, I don't have anything playing back. Let me see if maybe somebody in the chat can comment.
does anyone hear this? Am I crazy?
Is there a playback going on, guys? Let us know.
Yeah, I don't know. Dead chat, man. My God.
I don't know. Wake
Hello?
up, guys. Get some coffee. Let's go. Let's go. Okay, they're not. This sounds good. They're
Sounds good
saying,
on your end. I don't know where this is coming from. This is so weird.
don't know. Have to keep an eye on that. I don't know. Let me maybe just turn it down or.
We'll see. No, try just keep going. If they're saying
All
it's
right.
fine, then
Yeah, let's see if.
oh wow, where did that come from? It like just somehow I have an open. I didn't even, dude. Let's just keep it going. Sorry,
All right.
that's so weird.
No worries.
What the
Okay. Thanks,
crazy?
guys. The chat is
Sorry.
alive. They have come
Yeah,
alive.
it's good. That was it. That was the whole point of me doing that, man, was just to see
Yeah,
if everyone was there. Okay.
we were
All
gassing
right.
you guys. Uh,
Just disregard that. Okay. Breaker breaker.
yeah. Well, so I listen. I think there's plenty of time. I think if we're going to trigger for this return move, or let me go to Apple really quick because I think it's Apple. If you're going to get these indices to do that big move, then Apple, Microsoft, Tesla, the big cap leaders have to go down too. And it's not going to be an individual thing. Um, and Apple, I was saying this earlier, didn't quite, almost perfect type 2. I mean, it was so close. Type 1, I would accept that, but the fact it didn't get to the 1618, all right, maybe this is still in like a throwdown type 2, but just like Microsoft, just like the other ones, you're at 153. And again, to get that to go to 131, that's a lot of market cap in out of both the Dow and the Nasdaq, and trying to piece that together where, okay, if Apple has a ways to go, Microsoft's got maybe 5 or 7%. Apple's probably more like 12%, maybe as much as 15% before lower, before I would say that this is fully retested its pattern. The fact that we have these massive patterns, great. If we're going to get really worried about the larger market, it's going to be on the failure of these patterns. That's just, but in the short term, yeah, we are kind of falling over the edge here down to the retest those zones now. I mean, it's
God, man, yeah, Apple's so ugly. Like bearish engulfing, hidden bearish divergence. My God, I don't even know on that 886 shark, that completed like perfectly. I didn't even notice on the weekly that shooting doji star stuff. Disgusting. Yeah, I'm below 156. Why not 145 and then 138? Yeah, it's
we
just
had a crab on on that e-signal platform. That's the little bit different data than, I think it's better data, but we did have a shark on the trading view platform. I'm popping that up now. And shark or crab, 175 area has been, again, been the main number for Apple for a while. Um, and then 152, 152.59 to be exact, is your target one. Technically, yes, we could say it's at a 50 level. It's at a 50
mhm,
level, but what's it doing here? And it's already
nothing. Yeah,
nothing,
no buying.
broke to new lows after 3-day reaction.
Yeah, you're
You
trend reversed, right? Already. So
Yeah, I mean, you're a 1 bar breakdown from going much lower and deeper in the zone, and that's like all of these being, now you're scraping everything. Now you're scraping it all, and I again, it's I'll probably come in here by Monday. We'll see where Ethereum is, because that 1480 level for me. I mean, you went underneath it today. A close under 1480 would seal the deal. And a lot of these, if it's Apple, if it's Microsoft, if it's Ethereum, any kind of close below the current lows, or a little bit lower than where they've been, will seal the deal on this whole thing of a second leg starting. Even for Ethereum, it would have to be like this, where your midpoint's going to get triggered. You connect dots. There's your 50 level, and then it becomes a bat once you break under that 1430. Yeah, for sure. For me, I've been bumping stops. I think 1480 is the line in the sand now, but if you're just going to connect dots and live by M's and W's, your next 886 comes in at around 1020. And it's just, I hate to say that, it's going to take more time, but whether or not you're consolidating in that larger zone, it's going to require weeks into the end of the year. That's how you're not going to react. You're not going to do any kind of anything here. And maybe you are 2 days, a 2-day, 1-day breakdown. You're there. You're already there. It's frustrating to see that. After that summer reaction, you're a day away from officially being over. Maybe close underneath today's low. Would you need to see that, or are you there?
Uh, I mean, we're working on a bearish engulfing candle today. The hidden bearish divergence is playing out wonderfully. The failure to break into the bullish control zone on Bitcoin and Ethereum is really telling, and you're seeing like the aftermath of that failure. Being unable to break 1730 kind of twice now is concerning. Momentum on the daily clearly starting to shift bearish again because you're making two lower highs than the buying climax high of August 14th. So you're going to go to 1420. I just don't know why you wouldn't see 1420 at this point. Just test it. I mean, it might bounce, man, but probably not this time because you already did that. You already tested it August 28th. And it's all about Bitcoin too. If Bitcoin doesn't hold 19650, which oh, can't even believe it's holding it right now. So stupid. Once that all breaks, it's just about the levels to me, kind of. I mean, I certainly see that it'd be a bat pattern, right? Yeah, you break the BAMM, right, which is 1420, easily 1220, straight down to that, and then after that would be pretty much straight down to $1,000, which is the pattern completion zone of the bat. So you don't have many supports like at all here. I mean, you're headed to one crash course, collision course, and then a couple more after that, and then yeah,
Yeah,
886. You just confirm distribution. That's what Ethereum's done, I think, right? Because you can clearly see on the daily, right before your B point on your screen, August 24th, 25th, one failure to break 1730, and now maybe it's a higher high locally, but it doesn't matter. I've seen countless slightly higher. The S&P did it to confirm the trend reversed early this year. It made a slightly higher high above like 4,500. It doesn't matter when both, even if it's a higher high locally, if both highs are lower than the highest high, that's confirmation of distribution, in my opinion, and that's like a double top. And so that's the next level, and then you break it, and then I yeah, full reset 886, and it'll be interesting down there. I'll be waiting for just waiting to see it. But the problem is, right, Ethereum, that's going to happen. You got like 30 to 35% more downside from here, with Ethereum being down 8% already just today. Still 30% more downside potential. It's crazy.
I agree with that. You crack this here and now, you're done. I mean, I think you're for me. It is scraping now. There's that for me right there. That was the trigger point of that first pullback of looking for something to develop from here. You got something for about 2 weeks, but then we've rolled over in the last 5 days, and the whole the moving of the stops to tighten that whole scenario because of underneath there. Again, I agree that this full retest is what's at stake. That's at around 1,020. That's it. I mean, you've got, and I would even say a nominal retest of the crab at 1278. There's that one. That's that 1618 level. Again, these are all that would be a nominal level, but I would think come all the way back down to this larger 886 retest of the June action. And again, a lot of the markets are favoring moving in that form. They did some kind of move. Some did big. Some did nothing. And roll over now and go back to June lows, June levels. Let's say. Let's not say lows, but levels. 886 levels are probably good ones. And it's against whatever these larger daily, weekly patterns are. Going to go sideways for a while, like they did in 18, in my opinion. That's just you're not going to do it now. Then all right, you'll probably grind it for the year, grind it into I would say at least November. And if that's what again with the rates hold everything. And if those rate charts continue to go higher, then it's just going to cap any possibility. For
Yep.
me, that's and you come back and revisit it because then you're like you're really fighting up, against the stream, the current. Um,
Certainly. You have the Fed quantitative tightening doubling what they started in June, as of yesterday. Like that began. So, or maybe it's today. No, it is today, I believe. I think yesterday I was talking about it being today or tomorrow, which is now today. And yeah, it's kind of interesting how, you know, things are happening, even though I think it's like over time they'll be selling. It's, not like just today only. But yeah, you just had the Fed selling assets at the same time as raising interest rates. And it's literally to destroy purchasing power and destroying wealth because you need less demand for everything. So that would curb inflation. That's the strategy. Yeah, why fight that?
Yeah, there's total three without Ethereum and Bitcoin. So not even able to get up to the top end of that downtrend. You will probably grind here, if not lower, and that's again total three. Can't even get back to retest that pattern, and you go sideways for we're now what probably 40, 50 bars since that came off right there. Yeah, there's 30 bars now. You're 34 bars into that pattern. And
So
so
ugly.
where are
Oh
you
my
30
god.
bars after the fact? You're at target two. What does that tell you? Strong move. Strong
Dude, when you
move.
break 358 billion, it's over. There's
Yeah.
like 50% downside, I think minimum from there. Yeah, 50% downside. Your target below 358 is only $179 billion. Nothing to even talk about below that. I mean, that's death to this market. And it would make sense and it would be probably warranted. I mean, this is like 18,000 scams, man. 18,000 plus. And I say 18,000 like confirmed jokes that maybe they shouldn't exist. There's no reason for them to exist. They don't do anything. They just exist on a chart. They all need to get taken out, man. We need to take them out. Let's do a full reset on total 3, which I think is around 179, billion, isn't
Here's the
it?
total three weekly chart, and you do have yet another big fat bat pattern doing nothing after several weeks of consolidation, confirmation at 347. It did the big thrust, gave you another bearish signal counter. That hop level is 285. So that wouldn't be surprising. And then this is actually what Mitch is saying is this is all of the coins, all of your S and T coins. I like to call them toilet coins, T coins. Those are the real S coins. But
Yeah,
um,
flush them, please.
without Ethereum and Bitcoin, and that's not at an all-time 886 yet. And that's what Mitch is saying is like maybe that's what needs to happen. If you're not going to do anything here, you're not going to make progress. And this is like the real garbage crypto collection. I mean, I won't. I'm sure Binance Coin is in there too, but it's without Ethereum and Bitcoin. So you take out that so-called quality market cap, and you're left with this, which is okay. Crypto is under a trillion. This makes up like a third of that market cap. Well, a failure lower on, and these are the Dogecoin. That's really what the types and the shibs that Mitch is referring to. That maybe that's what needs to happen to those. Shib is although Doge was almost back to five last week. I mean, that was down here. Shib. Let me do Shib here. Shib had a nice deep crab there. Shib to go to what? What's that? 5.9. Oh, that's the market cap of Shib. Let me get the spot price of those. I haven't looked at that in a while. There was a pattern on the 4 hour a little while back. There's Shiba Inu, little deep crab. But what about the weekly?
And Shiba was one that looked kind of interesting compared to many others, but yeah, I don't know. Can't really. It's still kind of like okay-ish, but it's just testing old resistance as resistance again.
Yeah, I was surprised this thing did come all the way down to its 886. And that 886 is like there. What
Yeah,
it shows you that if you're not in an 886, um, and you're in a severe downtrend bear market, that's always something to keep in the back of your mind. I mean, I mean, Doge I know is there too. Doge is, I think that hit it a while ago. Where's
I don't think
Doge?
Doge ever hit an 886, did it?
It can't. Yeah, it did. Its all-time 886 was 7 cents, I think. Yeah, here you go. Binance feed. That's pretty much it. I go something like that. But yeah, 886 is roughly
Okay, yeah,
seven
it just doesn't
cents,
seem
eight
like it
cents.
because
Yeah,
the rally was so insane.
8 cents. Oh, at least that hit the
Yeah, it
886.
did.
But
It it exceeded it, and it actually just back tested it as resistance kind of weirdly, August 15th. What? Wow. One does not simply back test an 886 as resistance. The Yeah, I hate this asset below 6.5 cents. It doesn't make and nothing makes sense. Like just bearish until you break back above that for real.
yeah, and another penny stock. I mean, it just if this rolls to new lows, then it's a higher low, lower high, and a new lower low that'll be made. And again, under 5 cents for Doge is probably that people are going to abandon it. And I think 5 cents is a huge psychological level, just in general for crypto for lunatics who are holding on, where you think it's just going to hold at a certain number and it keeps breaking down like this. I think at what point are you going to just say, all right, it goes back to a penny or it goes back to 3 cents or
At
whatever?
least a test of 2 cents, that peak from January 2018. I don't think that's off base. And eventually that would happen.
Oh, this thing, I see that
I have a
1.4.
little peak.
Yeah, you're saying from back here. Oh, that's 20. Oh, yeah, all the way there. January 14, around 1.92.
Yep.
Yeah, there's history down there, but I mean, anybody that I've got to think anybody that's holding that thing is probably most people are underwater if you're still holding
Oh
that thing.
yeah, man. God. I don't know how you could have bought into that mania and not have taken profit or gotten out, right? It's just insane to me. And it all ended the night he went on Saturday Night Live. Like literally, that was it. And just remember the mania where you had like legitimate companies like social media were like strategizing things. They were saying, we will buy this many Doge or something. We'll give away products if it hits $1. I mean, that's peak insanity. Having companies actually do that. That's like they were like part of the problem in the mania. I don't know.
Well, a lot of them definitely did. I mean, a lot of them are, but they're now. Is this the reality phase sinking back in? I mean, okay, I haven't brought this one up in a long time, but I did notice that Hex is back down, new lows for the move,
Mm-hmm.
and this is are almost there, not quite for the move. What's the prior
Yeah,
low?
retest going. Well, it broke support, so that's all that
2.8.
matters.
Yeah,
It broke that candle low close from May 20th, 2020. And below that, I mean, the only reason why Hex bounced where it did is because everything did. When Bitcoin like bounced June 18th so resoundingly, like all the algos and bots just wherever the assets were, they rallied too. So good for, saved by the macro. Um, but I think when you're below that 3.9 cent area, nothing makes sense until 1.6 cents. And so where we are now, yeah, that's the target. That is the target, certainly.
yeah. You need another reading. You need another oversold reading, and that's lower, and that's some real bleeding action. That again, this is maybe it goes to 99% correction of all time high was what 50 on that 50 cents on this thing.
Yeah, man, it was ridiculous. It was yep, 51.6.
Yeah.
Man, it was nasty.
So come all the way back down. All right, and those are the kind of things I will.
Perspective.
Yeah,
Um
to really.
perspective for you. 53% downside from here. From where the price is now.
Yeah,
53% until anything makes sense.
sure. I wouldn't. I'm not looking at this at all. I'm just saying, as a sign of things bleeding out, that would be one.
Yep.
The
Should
other
be
thing.
fast. I mean, I figured it'd be fast. Figured this would be like straight down, like it did once you broke that 10.9 cent area. Boom. I mean, it was like we were like monitoring that really closely, and it collapsed so fast. I figured we'd be doing that again. Probably will soon. You just gotta waiting on Bitcoin to accelerate. It's it's dump. I mean, it's just my God, man, Bitcoin just hanging on to the 2017 cycle top level still, and you can probably thank people going to lunch or whatever because the cues are kind of bouncing back today, right? Like buyers are defending again. It's just so, oh my God, this market is dead, dude.
Yeah, I think you're looking though at examples of the weak players leading on the downside. You know, the weak players that are already back at the new lows. If it's Meta, if it's Facebook in the tech stocks, if it's Hex or Doge back at their lows from June, and then if they crack those lows, those are going to be the first to go. That will show you what the larger market's going to do, and then in terms of other big ones, if Cardano does the same thing after all of the gyrations of the last literally, 5 months between 55 and 40, 45, I would say, and you take out these lows here, then that too is a major continuation, even on the weekly, where the weekly becomes, there that's a better chart for Cardano, and that's actually another one I'm really watching to see, okay, gauge the potential severity of all this. And you're at the 886. I mean, this is the other thing where your
Yeah, in the
exact
vids.
886 is right there. So if you fail that
Oh,
886, any close under 38 or whatever, you go back and probably go back to the X point because there's nothing between that 886 and
yeah, like 11 cents or something. It's stupid. Below 38.8 cents is a straight line down to like 11, 12 cents.
yeah, yeah. That's, to gauge all this stuff that's going on. The fact that you're in a kind of a dud, you've been in a dud market for markets like
3 months.
Cardano. Yeah, nothing. Um, Eventually that will tail off back into the predominant trend, and you know, 30 bars is like there from the confirmation end of the year. So it just not doing things. And, a lot of these have not done much. Surprisingly, since June, others have. But even something like here's Binance Coin, okay, and again, probably considered the strongest of outfits.
Mm-hmm.
Go on the daily. We have a 257, 256.60 is this target one I've been looking at for a while, and still think that's another one where if crypto is going to go down, Binance Coin running lower will be a thing to watch or see because then it's going to denote a real move, and I think that's under 256 with this against this bat pattern that was traced out. I mean, we could do this. I mean, the software is picking it off at a slightly different peak, but still has the zone right, and you're still looking at your 886 is 320 and 257. That pretty much has to hold for BNB and for crypto. But if that breaks, again, another critical level that says, all right, then this weekly trend is going to resume. And like all of these, is this a pause from June, the 3 month, 4 month pause, and then are we continuing lower? All of them go to an 886. Bitcoin, Ethereum, because they didn't get down there on that first move going back to from June. Bitcoin got to 17, but the all-time 886 is at 11K. Here's the Binance coin is at 85. Okay, that's where your 886 is on Binance coin. You're 272. So again, what you're saying here, or what we're saying is that like if this falls apart and it fails these lows, the next levels across the board with all of these are much lower. That's why it's so critical. I mean, this next week, next three sessions, maybe by Monday,
Mm-hmm.
Tuesday, I think if it's going to fall apart and it starts to do that over the weekend into Monday or Tuesday, this probably is the start of that larger retest. Happens pretty quickly.
Yeah, I mean, you're gonna have to go back down to 200, 220 to test that really key inflection point, which is kind of a BAMM level, I guess, the massive one. And you held it once, but you got to go retest again. I think
Yeah, there's a few,
just
a
makes
whole bunch of
sense.
static lows there, 225, 230, and there's nothing supporting that other than going down to go back and retest again. 57's the starting point, it's the first spot. What was the other? Oh, really quick. Let me bring this one up because um, wanted to bring up crude oil because I know that's down again, and this one as well. Crude. Let me clean this up. Too many lines here. I think this is directly related to interest rates as well. And if crude gets under, 82, gets under 80, I think it got a lot of trouble. And it's not doing, it's again, deep crab down here that I've been talking about are around 80, 89 actually. And we're well underneath there. This is another one that looks like it's a dud in terms of what it's doing in this bullish zone. There's the shark, finally.
Lower highs, lower lows.
Lower highs, lower lows, already pierced top level on the shark. And again, you take out that, what's that? Last week's low is at under 81. It's over. I think crude oil goes, to 65 ish.
Hmm. I agree. Yeah. The inverse of that's natural gas. So strong, man. My God, so bullish.
Well, nat gas is having trouble at that 9 level. Again, I think the 9, I need to see something. And today it's painting a pretty nasty, after yesterday,
Yeah, yesterday was crazy.
they're smacking it right back down. $9 has been
Oh,
firm
dang,
resistance.
7% down. Holy crap.
And here's
Wow.
the pattern. Oh wait, let me get some patterns there for you. Um, Hold on, I took off the.
You just can't go bearish on it yet just because its most recent events have been the highest high and the highest low of the entire cycle, you know?
Yeah, it's hanging up there. I still think it's above. When if you get above $10, that's where it just shoots the gap. But there are a lot of things up here. Let me get back to that chart on weekly. I didn't have the bearish lined up. It keeps running into, sorry, it's a crab pattern on the daily. Up at $9. I'm sorry, it's on UNG. There you go. Around $30. And gotta, if that fails under 27, I would say that that's over for now. Come back to 6 on nat gas. It's here's the weekly. I think the weekly's a better, yeah. Weekly's a better pattern across the board.
Oh my God. Is it like type 2?
Really, this is so close. That first test did not hit, fell just shy of the 1618. It's kind of crazy how that happened, but we did get confirmation yesterday or last week, and then the check back yesterday. So on the weekly, it still is kind of like a type 1 correction to go down to 24 bucks. I think a pause here with rates spiking the way they are wouldn't be crazy to think, but even with the bigger patterns there, I've been really cautious on it up here. I do think we'll get another opportunity, but probably after some kind of pause, come back down, and then try to set up for the return later. But we're in clearly in a reaction phase down, and crude oil is just disappointing. Not It's where it should be, or everyone thought it would be, rocking and continuing to go, maybe new all-time highs. That didn't take shape.
Yeah. Well, that's what they were going for. I mean, that's probably why, right? That's the whole reason why the CPI was not like, going insane, just because US oil. was down, right? Gasoline was down. But because and like it was up, it was like a beat because right, food and like cost of living inflation was elevated, you know?
Yeah, but most of it's energy, and I think it's if energy comes off, and if nat gas or crude oil does go down, here's actually this is next December. I wanted this year, December 22. There are some patterns that were up there at the top. Um, Here's December 22. This is one I'm looking at as well. You see that the months, the winter months, okay, they've been lower than the front months for a while. This pattern popped up for me recently, but still need to retest. Generally, $80, 82. That's on December. I think the front month right now is October, or it soon will be October. And, so you're going to get into the winter months, but looks like, look, there's been no hurricanes, which usually runs natural gas or energy at this
That's
time.
crazy, man. That's
Yeah,
like this is historic. I don't think it's ever happened since we began taking records.
I'm not
Like,
complaining.
yeah, right? I mean, that's maybe it's what is it? HARPA, DARPA or whatever. They're controlling the weather,
Oh, it could be DARPA.
protecting
Yeah,
us.
could be. I don't know. I'm
Kappa.
glad I've been through a few of them, so they're not. They're more. I think I actually I shouldn't say anything, or I'll get a big fat hurricane next week. But
Oh no, dude.
they're not fun.
God.
But I still say that there's no pressure on it. Not there's not a lot of to heat up the crude market,
Yeah.
and the trend is still down despite a lot of people talking shortage or narrative or whatever. Look at what it's doing in the face of all of that, continuing to make new lows and break down. So, um, just another market that's not doing what I think the narrative was saying it would do. And again, I feel like those winter months are priced cheaper and still have to go back and retest. So
It was the
nothing.
shark, man. It was the shark. The cyclical shark. Like the cyclical reversal shark. Like the date of like June 15th. It was there. Yeah, slow grind, or full reset, I guess, and then it was over. I mean, my God, yeah, dude. When you're below $87 on U.S. soil and nothing makes sense till $78 minimum, you go test that, then we'll talk. Right? I mean, it's just I go one level at a time, and you just you're below the moving averages. Everything's just ugly. But the thing is, like I don't know how people could be surprised. Dude, the thing never stopped, really. It had some pullbacks, but since the COVID crash, we're talking 2 years straight, the thing went from its low, which was, pretty much zero, to it went up, oh my God, from the COVID crash low to its highest high, which was March 11th or so. It went up, you won't even believe it, 112,000% in 691 days.
Mm,
112,000%. That's not even a joke. The COVID crash loaded the high. So yeah, man, things end. Bearish and golden candle will be confirmed on the daily in less than 5 hours too.
yeah, USO on the weekly does not look good either. I mean, here's the 4-year chart, beautiful bullish crab pattern, and that uptrend has remained intact. But looks like we're going to come back down and retest it. Um, Reaction's over, and you're not even nowhere close to, I think, even resuming that anytime soon. You got to come lower, even if you didn't have any confirmation. Is that the end of the reaction? That's the other question. Was that it? Was that from the COVID low up to target two? Was that the move for USO? And then we have to go into a type two return because any lower than where we are now, you have to start thinking that. I mean, that's how severe this USO position is within harmonic pattern framework. That if that's reaction and reaction over, then you go to return. Then again, very limited possibilities. There's just not a lot of options once you start to crack lower, and you kind of have to just step aside and let it go. I mean, that's what it seems like it's lining up to do right here.
Yeah, USO, man, like confirmed distribution, July 29th was the first time, then the second time was August 29th. And when you're below $74, that's it. I mean, you're just sitting at this one low from June of 2017. And that's just you're absorbing remaining demand. Once that demand is absorbed, $61 so fast. I mean, and guess what? You're below the 200-day moving average as of today. You've been flirting with it, but now you've gapped down below it. I just if you stay below that 200 moving average, I mean, let's be for real here. I mean, in December 2021, you fell below it for a few days before like getting back above it, then back testing it, and then going on the run to the buying climax that took you to 9250. Um, when you're below the 200 moving average, something really bad's going on. Like it's just something uncharacteristic of since you broke back above it December of 2020, you've never been below it really. And now you are breaking back below it after making lower highs, consecutive lower highs, by the way. So the trend is like literally in the transition of reversing right now, if not full on reversed. So, you know,
Yeah, that's what you're talking about. This to up here, and then taking out all these recent lows with the last few days action of going below any tested support going back even a year ago, or sorry, even go back earlier this year to March. Even you can stretch that into late February, where that first time traded and then came back, and you're just kind of waffling, going sideways, trying to break down from that. Again, it's just counter. It's amazing how counter to the predominant narrative of gas shortage and what the patterns are saying here. Even if I was looking at that butterfly pattern, which I am currently, I still need to see confirmation that hasn't generated, and I would not be surprised to see this hop level that's at 66, 67 hit, and that's your 70 currently. So you don't have, and there's no confirmation there. So still lower, still in the predominant trend,
yeah, and
lower.
if you're looking at the daily, if you just disregard that March 8th whacked out high, that weird, abandoned baby kind of doji over there,
Oh yeah.
take that out and you have like an imagination, you could certainly say momentum has shifted, right? There it was in the Bulls' hands, and now since August, the whole month of August, the momentum has shifted to Bears again. And you're talking about like a potential massive like head and shoulders pattern, where I think you've kind of already broken that. You broke the neckline. I think the neckline was like 71.45 of that, and a measured move of that structure. It's big time. It's a big move. Let's see, like measure move, I would say would take you to like 49.50, say $50. And if you're at $50, why not $47? To go test the high from April of 2020. I think that it looks. I'll show you. I'll send it to you in Discord so you can see it. Again, it's kind of nuanced and it's a little. You got to be open minded to see it, but it's something like that. I just posted Momo shift
No
more than
problem.
any name calling.
Yeah, nice chart. Yeah, here you go. I agree with that. I mean, and again, it's kind of like gold too, where gold went sideways for a
Oh my
long
God,
time, and now
gold.
it's breaking down, and you got to say, all right, that's probably done now for gold for a while.
Oh,
Uh,
like, dude, it's done, dude. It is done, man.
and that's the same deal.
1522 minimum if you're patient and you wait. But that's kind of been the case, man. You confirmed the top. You confirmed it, man. Like you had your chance. You had 2 years, right? You tried once, sold off, took a year, year and a half, and then you tried again. If you look at the monthly, it's just like the daily chart on Bitcoin when it tested 65K, crashed to 30K, and then ran to 69K and failed. It's the same thing. It's like a fractal. Bitcoin's chart on the daily is a fractal of gold's chart on the monthly.
Mm,
So that means like really bad, like talking, 1300, in time for gold. It might take 6 months to a year to get there, but that's like where we're probably headed. Look at that, man. That's ugly stuff. I don't know why yours isn't. You're on gold futures. If you look at gold spot XAU, it's done. It's already broken.
maybe something like that, and give you the bat. They're
Oh
12,
yeah, full reset,
1260.
man. Oh yeah, ate
1260.
it.
Why not? And it's done. You couldn't crush 2000. You could not crush 2000. And then
In fact,
you
you
spent,
confirmed you could not, right? Market participants confirmed it.
yeah. And you spent how many months, year,
Dude, it
two
was
years up
like I
there?
think 2 years or something, or
Here's
close, like a year and a
XAU.
half or something.
Yeah. Okay. Check that out. It's pretty interesting.
It's ugly, dude.
Whole lot of stuff. The XAU down at 82 or lower minimum. Once you get to like two-thirds of the way, yeah. And that's a type two. It's a type two return. Here you go again. Another type two on the weekly. It's a couple of patterns. All right. It's a bat. It's a crab. All pretty much converging at the same spot. Just generally, there's the first reactive move for gold on the weekly. Now you've gone back into the return phase. Um, it was revving for over 2 years, and it looked like, hey, inflationary environment. This can make a run at all time new highs, and it never did.
Peter
And
Schiff, man.
now come back. Now you break the trend line, which you did there, and you can even say, all right, it just did it maybe 2 months ago. Absolutely. Well, the only possibility is to retest this zone. That's at 82, and that probably puts you back at your 1500 level for gold generally. Silver, I know, is not doing much either. But
If
yeah,
you look left, man, nothing makes sense at all till 1522, really.
yeah,
I mean, 1641, there was a peak from June of 2012. One time, man, one time. I don't even care if it hangs out there, if it pivots there. It's good. Whatever pivot would happen, it'd make probably a successful bearish back test of 1682 just to, confirm the validity of it as resistance now because, how market participants love back tests. So
there's GLD taking out your March low today.
they had to look at GLD in a minute, man. Oh my
And
God, it's so ugly.
what about the monthly? Because the monthly, I know, again, yeah, I knew it. The monthly was up at those 2011 highs, and you're not breaking down. You're not breaking out above that. If anything, again, connecting dots here, amazing. That's a double top.
Doesn't that look like Bitcoin's chart from just 2021?
Yeah,
Like
similar.
65K and 69K?
And that's 33K right there.
Yeah,
11.
right. 33K is $100.
Yeah.
Oh my God,
Yeah,
man.
there you go. And then, so if you're Bitcoin, what's gold going to do? Like that, 886. Are you kidding me? Are we going to call that this early? Going to call
Oh
the
man.
all-time XAU spot reset on
Monthly double
gold?
top. Dude, it'll take 3 years,
Take
but
five
we'll get
years.
there.
Take 5 years to get there.
5
Some
years.
kind of
Yep, there you go.
deflationary
5 years, fine.
tornado down to
Oh God.
60. I've seen it happen before. I've seen the metals, and I spent that summer on the Philadelphia Exchange where this is traded, and when the gold goes, it's like crickets at those posts. I mean, it's like no one wants to even go close to them. It's like bad juju or something. I mean,
Dude, it's
that,
a double top within a double top.
yeah,
What kind of confirmation do you need? If that's not confirmation, nothing is confirmation. Nothing.
yeah, yeah. I mean, what is
And
that?
silver's not any better. I mean, it's just deeper, it's closer to its big 886.
That would be a hell of a move.
I think you'll be seeing 1387 in time. Oh my God, the monthly just go to the monthly on silver and look how bad it is. Holy crap. In fact, what is it doing? It's testing the monthly candle high close from February of 2008. Oh, go figure.
Oh,
How
look,
ironic, right?
wait.
Just
Look at
draw a
this
line
chart.
there.
Look at this chart. So what I have, software's kicking out, and I think this is, God, I need to look at more monthly charts because when these pop up, they're amazing.
Oh,
Uh,
the monthly charts right now across like all markets are so important. They're doing so many bad things, terrible,
yeah,
fatal things.
yeah. This is another return setup where SLV's got to go to 13. I mean, that's
Yep.
no doubt
But
about it.
plot a horizontal line on that monthly candle close from February of 2008. Just plot like a horizontal line there.
Okay.
Yeah, that peak back there, that first high,
Uh,
2008, you see it?
yeah, like that. like that, right? From February.
No, 2008 though, right?
Yeah, I'm on
Like go
2008.
I think I might be behind or something. I see you continuously. You're plotting that downsloping arrow. I might just be behind.
Oh yeah, yeah, yeah. I'm all the way to the left back in 2008
Yeah, that's what I'm talking about. Um,
here. Yeah.
yeah, if you make it like straight and perfect,
Yep.
right at that 1982, you can see the price action. Well, I'm looking at XAG spot price. So yeah,
Okay.
so SLV is just not spot's so much better than these derivatives that track the uh the spot price, you know. And on XAG, just look at I'm gonna post it to you and show you how unbelievably perfect it is. It's perfect, man. So last month, bearish engulfing candle and a confirmed bearish breakdown below that 1982 level. This month, we are getting a successful bearish back test. So that's just it's perfect, right? Here, I'm just posting
Yeah.
to
Post that
you.
up.
And it's in fact broken the 200-month moving average and is successfully bearishly back testing that as well. It's gorgeous, dude. That is bearish beauty. That's like bear porn, bear chart porn.
Chart porn. That's funny. Yeah, there you go. There's your chart.
Disgusting. And there nothing makes sense on this chart till 1387. Nothing. Literally nothing. Straight up, straight down situation every single time. And
Yeah.
that fulfilled the 886, right?
Hmm.
You give yourself a big old looks like it'd be a shark because of the higher high February 2021. I don't know. It could be a
Yeah.
bat or a shark,
No, that
I
could be a
guess.
shark for sure. Yeah, it could be either, but
Your metals
definitely.
are screwed, chat. That's what we're trying to say. You won metals, you're screwed.
Yeah, but this
You're
is
screwed.
when if you're entering into this liquidation phase, that's when it all goes down. Oil,
Yeah, everything correlates to one, right?
yeah, it goes and everything goes to the dollar. Everyone runs to a money market, and that's
And
probably
VIX
what's going to happen.
elevates, right?
VIX
VIX
will go
breaks
up.
out.
Yeah, the VIX is probably
We
one of
should
the
look at
few.
that.
Let me go here.
Why not?
Sure.
Because I mean, like that thing, I think that was kind of the part of the formula, Jerome Powell's soft landing stuff. They're somehow trying to control the VIX because I think they know when the VIX gets above a certain level, the algos across the world go insane. They go to trader mode, they get out of investor mode, and that's when you start getting really bad crashes, limit downs, circuit breakers, right? They're trying to control that, I think. Keeping it above 30 too long, definitely not letting it get above 40. Somehow, I don't really know how they're doing it, but that's the ticket. That's the key. The
Well,
problem, though, is it's the continued accumulation of volatility.
yeah, and you have a shark pattern up there at 38, 39. And it needs to be retested with some kind of confirmation. I mean, you can bounce between these two levels, but yeah, and again, go even further out. This is the VIX index, and get some historical perspective. You're nowhere near even the intermediate peaks, which
Hmm.
is 40 to 50, and then your crash scenarios are 80. So those are standard metrics. Pretty amazing
Only
though.
twice, though.
Only twice. But the other the crazy thing about the VIX, which used to actually be a lot more fluid and actually be I think a truer metric
Hmm.
before
Sedated.
online trading. Yeah, I mean early the 90s. You see that even in the 90s was down. This has spent a lot of time down at 10, but that's also because of the era of the QE and everything. Basically, put that on antidepressants, and that's why you didn't get so many crazy events like only two 80 signals, which are good to flush out the market, but you don't have anything here yet that within this whole downtrend of the last 10 months, you have yet to generate an extreme VIX reading, which is, yeah, like Mitch is saying, that's something you want to see. You would want to see VIX flash to 40, flash to 60 or 80 even to signal, okay, that's it. That's the end of the selling. And that's not what's happening. I mean, It's two ways. Goes two ways for sure. I don't really see
It
what
was
the.
really weird. The day before the big dump we got, right? The whole inflation, a couple days ago, the day before, the prices were going up and the VIX was up like 5%. It was so weird. And then of course, you can't really know. And then the next day, boom, massive gap down and dump intraday. So I don't know, man. Like you're just making higher lows. Like you technically made like okay, you made a low of like 1869 April 1st, and you made a marginally slightly higher low of 1936 in mid August, and you are still showing accumulation. You know what's happening on the VIX? You're above the 200-day simple moving average again, as of a couple days ago when that spike happened. Um, this is just not going to end well. Like last time we saw accumulation like that was before the COVID crash, but even before that was 2008. Showing accumulation. I remember last time we were live together, we talked about accumulation of volatility, and it's a weird thing. Doesn't happen often. It only happens before crashes. So, yeah.
Yeah, I would see. You actually have a daily. You have patterns here, no doubt, on the daily VIX, where you're down at the 22 levels, probably your buy point. You have a little bearish pattern right now. Let's see what happens there. I mean, you don't need the VIX to do anything for this to keep going lower.
Hmm.
If anything, if it keeps going lower and the VIX doesn't respond, it tells you there's a real sustained momentum behind this, and that's what I'm trying to figure out. If this sustained momentum continues off of all of these patterns that triggered at the end of August, and then do we just grind it into the end of the year? And then you just that's how you got to play it. I mean, that's really there's a lot of retest opportunities, things that like Microsoft. Okay, yeah, I want to look at a retest opportunity like that, but not until it gets down there, which is 10 or 15% lower. So what's that say? If Microsoft needs to drop 15%, probably the rest of the market's going to need, you know, to do some things and line up properly before they would be another long opportunity. And again, everyone is trying to figure out if these June lows are going to be taken out. Um, sure seems like most people are positioned for that to happen. We got to see. It would be a hell of an event. Here's a 2 year selling off actually. Um, and just a simple retracement of today's gains. Let's go there.
What is the US tier ticker?
The what?
You said you're talking about the US
The
10
two
year
year is
yield?
US 02Y.
0 to wow.
Yeah.
Wow. Okay. Okay. Yeah, dude, insane. That's just wow. You're at highest level since '07 again. It just keeps mooning.
Yeah, these
What
are
is what does all this
remarkable
mean?
moves. I mean,
What does all this meaning?
these are abnormal moves. I've got to say that. I mean, it's I don't normally look at rates, but these are abnormal moves where the rates, okay, are increasing. That that's anticipation that the Fed's going to do 75 or more. Um, and the problem also that compounds this, and I was saying this earlier, is that the 10 year is way behind the 2 year. So when the short term rates clog up, get well above longer term rates, 2 versus 10, or even like 2 versus 30, it or 20, it gets to be a real issue that the short term money is just not going to go into the market. It's just think of it this way: people are going to favor less risk when that goes on because they'll just park their money in the short term rate, the higher rate, and
Hmm.
until things normalize. And that's been a condition of bear markets for sure, and interest rate inversions, not only spikes. I've been saying that for a few weeks. I think now it could become a real problem if, like we see this, and we just see this continue, uh, and this rate move for the last 20 years. We haven't seen anything like this. This has been for a that's a 12-month view of rates going from, I mean, amazing nominal quarter point, 40 basis points to almost 400 basis points. So there's an effect on the market that it's kind of a lag effect, but it's so. dramatically different than what we've seen. I guess you have to go back to 2018, and even that wasn't nearly as severe as what we're looking at now. So, you know, there has to be an event that, and that's the way I look at these kind of things when they come together like this. Well, there probably is going to have to be some kind of shakeout event.
Yeah,
There's,
circuit breakers or something.
yeah, to
Because
end
I'm
this.
looking at this and it's like interesting because you had like the 2 year like moons between 2003 and 2006 and doesn't end until 2007, June 2007, and those were all like boom times into mania times, and then same thing with 2000. It didn't end till the crash started. So is that going to happen again, where when the crash really starts for our index funds, does this thing crash? Because I thought, like,
Yeah.
why? Like, if it's people are going into this, wouldn't it continue to go up? But like, I'm looking at the historical peaks, and it doesn't make sense. Like, why would this dump if people are putting money into it because the market's crashing?
Well, because the actual market event of reversing is usually the last thing to happen. It's kind of a, because the statistics are delayed, which is the other part where,
Does
you
this
get,
correlate to one too, like everything else? I
of
guess.
course, definitely.
Yeah. Okay.
So this
But
would be, where
okay.
we're looking with other patterns and stuff and other levels. I'm saying go back, retest some of those. The 886 here at 4.5, I think that's a likely spot. You're now 385. If you were going to take out static levels like the 2018 peak, which is right here at like 275, and you just stack the levels the same way that you would do for stocks or anything crypto, and look at the interest rates. But the thing with these markets is that if you're not trading bonds, but you're trying to get an idea of where rates are going to go, to help dictate whether or not the market is going to respond negatively or positively. But this one, rates are screaming up. What's market going to do in the face of dramatically higher rates, especially if we connect dots and say, all right, that's a shark pattern up at 4.75. That probably means equities go lower to price in this reality, and would need to do so. I think in an aggressive manner, that some of like the VIX things and the other extreme metrics would have to tick off before we can end this interest rate surge.
Okay, so when you're buying the 2 year bonds, it's going to drive this down, and so people are going to be buying those bonds as like a safe haven for the
Yeah,
collapse of all the other markets.
yeah, we're
Can we
looking
look
at
at the?
rates. We're looking
Can
at
we look at?
versus prices.
Yeah, gotcha.
Here's a 10-year. Was that a price chart? 20-year. There's a price chart. Oh yeah, look. All right, so here are the price of the bonds too. I mean, amazing. That's a 20-year daily bond, and the patterns are beautiful. I mean, this is a massive crab pattern on the 20-year. This is where, okay, if you're the price of the bond, we were looking at the interest rates on the previous chart. The price did the big rally from, I guess it was what, from May, the pretty substantial rally on the, and then coming back down, where if rates are going to continue to rise, the price goes lower. We're looking at the price chart of the bond, a 20-year bond. If I wanted to buy the bond where I thought it was a great idea to buy it, it's on the retest of that crab pattern. So to me, that says this thing has done its reaction, reaction over. We're in the return phase, and which means prices go lower, rates are going to go higher until we can retest these levels. I mean, 81.72 on the 20 year, you're trading 94. That's an insane ways to go. But it's also, you have to remember that back end 20, 30-year rates are way out of whack. They need to come a lot higher than they are. And so the direction is lower. Now that's another rate chart. Let me find another price chart.
What about UB1? It's like the Treasury bond futures, which is like broken this key support from like that goes back to 2014, and you're currently at your lowest price since April 2014. Um, like it just recently broke the support again.
Yeah,
You ever look at that one,
there you
UBS?
go.
One?
Well, I just popped it up. UB1.
Yeah, UB
Yeah,
one.
you're
Yeah.
all the way back down. You're below COVID low. Wow, what is that? Okay.
I'm not even sure what it. I just know it's like the Treasury bond futures chart.
Yeah,
All
so
like I have it on my
that's the
watch list.
price. But here, get
Super
perspective.
ugly.
Um, yeah, big bat pattern that failed. No
Yep.
confirmation.
And a reciprocal ABCD too. It was a 50% on uh, A, B, uh, C, the 50%, and the 200 on uh, D or whatever. And yeah, it reacted and then is collapsing. It's rolling over. And it's just headed to that 135, 30 area.
Yeah, 133 I've got. But
And then
again,
below that, though, is
yeah, well, here's the
2011
monthly.
levels.
Monthly chart going back. That only goes back to 2011. I don't know why.
Yeah. It's just
Um,
future. It's derivative, right?
but if that's, I don't think that's all the data. I'd have to look at that. But, what do we got here? Bad pattern, probably. 886, something like that. And all of this stuff that we can trace out and point still goes lower. So rates have to go up. Rates are they're going up now and they're going to continue to go up. And that's what's going to really pressure currently what's going on. US market, what's that doing? Nasdaq is down 132. I mean, that's actually probably the worst thing for it. A day like today, you really should just just go out and beat it up. I mean, just take on gold's down 34, silver's down 35 cents, S&P's down 20. That's not too bad. VIX is actually down a fraction, um, and the Dow is up 15 points. It's amazing.
Wow.
Amazing. You would want to see this thing wash out now. If it's now or if it's in 2 or 3 weeks or something, and
Tis the
we're,
season, though.
we're gonna
Tis
know.
the
Yeah,
season.
tis the season. I would think it happens sooner than later. I think it
I
happens in
found this
September.
really cool like stat. Let me try to find it real quick. Um, just hold on, just bear with. Okay, all right. So it's true that the S&P 500 in its down years, it's rare for the low of the year to happen before August. If you go back between 1940 and now, like the down years, let's see, all that time. Let me just count this. Okay, so like 22 different times between 1940 and 2022 in bad years. The high majority of the time, the lows of the entire year are coming, in October, September, and October. Of those 22 to 23 times, only five of the times did the low of the year come before August. All the other times it came after August. So that's just a stat to be mindful of. That's what I'm saying. Tis the season, right?
Yeah, no doubt. Also, most markets, if they're going to bottom in that October period, they'll confirm them in November.
Yeah.
The other thing, there's a lot of second year work, a lot of work out there on the second year cycles, decennial cycles. Um, but even if markets and in many decade lows that happened on the second year, if it was 92 or if it was 2012 or you know what I'm saying, it still took like 2 more years to really get going. And that's probably what we're looking at here, where get us some low in the next 6 months. It's not going to be in the next two. I don't think it's going to happen in the next month. I think it's more like a low, especially with this kind of action. The low is going to take longer time, maybe towards the end of the year. That's something I've been alluding to, but now it looks like a more of a certainty that we're going to stretch this out to the end of the year, and then have to wait and see, like, okay, how low is it? Nasdaq 11,000 or is it Nasdaq 7,800? Those are just the only two options I'm looking
Hmm.
at, and other markets, crypto, Dow, S&P. Again, it's either here or it's lower with a lot more time, and starting to really looks like it wants to opt for the more time scenario. I don't know. Yeah, take a look. Here's another one I just pulled up is Target, which
Mhm.
has been annihilated. And this is something to consider. I'm going to show the longer term trend, but everybody to take a look at. Um, that even though this thing has been killed, we have seen these individual patterns form off the lows and set up in ideal fashion with confirmation. That's what Target just did, setting up your trigger up here around 172. You're still in the zone, so this is something I'm looking at. I'm looking at for members, but um, ideal trend continuation. Get back to target 153. I don't think is a stretch. And if you look at it relative to the total trend, it looks like it's, how can there be an opportunity there? Well, we've seen a number of these develop like that where they go down, they bounce up, they give you a small bearish pattern, and then time to go again. I said that Uber, yeah, that Uber one is just like this one too. They have these.
Mhm.
There you go. I mean, in a severe downtrend, there's the Uber. All right, so I'm looking right in there, but extended downtrend, bearish pattern right up against the downtrend line. There's a lot of these that have shaped up like this. Let me show the last one here, SPY. The SPY did that, like QQQs did that, and this is what they gave us. I mean, they gave us that extended kind of downtrend move that we're hitting now. So until this changes, it's like at least another week or more of, I would say, downside pressure to get down to retest these lows. Expect this thing to continue lower. It's just not. You got. I mean, this is the crazy thing. I want to finish up with Spy because I think it's been sneaky. It's been a tough
Grindy.
consolidation zone. There's been a lot of zigzagging, but if we're just going to connect the dots on the way that I look at it with 1 2, here was the bat pattern that completed, but there's your confirmation, and it came down to target one. Now, this is tough to see. I want to point it out, but then last, I guess it was Monday. It was Monday. We rallied up. We hit the XA level on the bat exactly. The high was 411.73. The XA level was 411.14. That is, by definition, the start of the type 2. There's no confirmation there, but that's why we got rejected. Then the confirmation comes in a bit lower. That's just a tough situation. Some of the patterns have been materializing, but then give you this really crazy, choppy zigzag reaction reversal behavior. Doesn't change the fact that, okay, if that is a real sloppy, ugly type 2, then we have to go and I'll just sit on this until I get to target 2 or come even lower and retest those bullish patterns. You're two-thirds of the way being there. The rest will get drawn in, I think, in the next week or so. Um, by the time we're in Vegas, I think we're going to be there. We'll be at those lows, and we'll probably be swimming at the lows when we're in Vegas, trying to figure it out.
Why possibly, man? Oh god, there's so many bad things. Like, I think energy stocks are finally maybe on their last breath. Like, I sent you that bearish Gartley on ExxonMobil, and it's like not just the Gartley, it's the context of the historical inflection points from history.
Oh yeah,
And and then I'm just like looking at like scanning some, and Oracle's breaking this parabolic uptrend that goes back to the year 2002, man. It's ugly. You're like Oracle's confirming the 200-day moving average as resistance like second time now. It's like I think the pain's coming, man. We're not even close to being done with pain. Just by looking at some of the individual assets on the stock market, it's just like, wow.
ExxonMobil is another one where, yeah, we have some real nice patterns. Again, really tricky action though. I mean, you
Hmm.
wait for that ideal completion. It did hit. I mean, you went through. You had the reaction back in June, but this case, you came back down when you did the return move. Look, a week ago, 10 days ago, you kissed the absolute high was 101.56. The XA level on that crab was 193. So by definition, again, another one that was, yes, that's definitely by definition, that is a type 2, but happened where your confirmation wasn't exactly where you want to see it. Usually you want to see it above, but it's already started. So I have to keep an eye on that too. I mean, I posted your
Yeah, take a
Gartley.
look left at all the resistance from history.
Yeah.
That's important because it's like not able to get to those levels because of those inflection points from history.
Yeah, check out this. This is what Mitch is talking about. So this is the all-time chart on Exxon, and could be the other, like crude oil. Crude oil couldn't get above the all-time 886. This is much the same. This is where if it was going to really bust out and blast through, it would have already be there. Now we're many months into this, and you're one red candle away from kind of ending this uptrend, ending, and not just the current one, the most recent one, but I'm talking going back from 2020. That's almost over.
Yeah, man. Like that's like, you add that with your harmonic and the Gartley I just showed that's real right now. And yeah, one does not simply ignore a Gartley, man. At levels like this, after a run like that, it's like if you're not gonna sell or go short, you never will, right? At a level like this.
Yeah, it is a thought. I've been waiting for this trigger because I do agree. And maybe energy stocks are a place to start looking for a short side opportunity. The patterns are there. Your two of
Yep.
two is there, and just like if it was the tech stock or Target, or this is even at a better location for
Low
potential
risk.
downside. Yeah, I mean low risk and potential downside is pretty big. If you fail here with everything else we've been talking about, okay, let's line that up too. It's not the rosy equity scenario we want to see where all ships are rising in this
Yeah,
market.
the
It's
macro is bearish. Yeah.
probably, yeah. But here we
And
go.
then so you have the macro that's bearish. Let me just see real quick. The XLE, which you look at the sector,
Yeah,
also looks like it's where it is. I mean, it's like pretty much testing this high from 20 April of 2011. If it breaks that, go to $91 again. But um, I mean, it's still kind of okay. It's still uptrending. I think it had its buying climax, and I think best thing it's gonna do is maybe hit an 886, fill a gap at $88. Um,
it's a big
but
crap
I'm just
pattern. We have it at 88, 85 is the big XA, and it did a type 1. I mean, this did do a type 1. Now the whole thing is, are we going to get to the type 2, or is it going to roll over here? I mean, it's really close for on XLE to finish the job at 88.85, and that would be it. That would be the 2 of 2, but you're
rising
still
wedge kind of too.
10% away from that. I mean, that's XLE is the one to watch, but it's got to do the full return to really be there. Here's something I wanted to show where XLY, just like everything else on the daily, a lot of the stocks, massive, you're in a return phase on the dailies. A lot of patterns, again, down in June. That's consumer discretionary. That's another market that has to run if the stocks are going to run. And look at here's the weekly chart right off the top. This is ideal. So this is another scenario where it's tough to see it if you don't understand the framework, but if you know that's a reaction and your reaction is over and is noted
Mhm.
by the trend line, that was at 164.37. Consumer discretionary should then start to go into full return phase at 134.86. Um, for
Yeah.
those for those that are on the software or looking for opportunities like that, it's stuff like that where you get something on a smaller time frame, like the what do we have, a crab, or yeah, we have a crab here. Back to back pattern dynamics. If we're going into a full return, which I think we are, then these are the kind of plays to look for, because you'll go back and run back to these numbers. Even if the thing holds, you still got to go back and retest these levels. That's what all of this slippage and stop failures are telling me.
And, like, for people that just don't know, if you don't know, the trend has reversed. It's over. It has been making consecutive lower highs, lower lows since the beginning of the year. It's over. Like, the trend is not bullish anymore. I'm sorry.
Went
Until
back. It's back now to bearish for sure. After that June respite, July respite, it's, we're back on now.
well, this August, what did it do really? It not only did it make a lower high than the previous highs from April, it also went and back tested that high from February 2021, regarded as resistance. You're also right. That pretty much rejected the 200-day simple moving average again. Like, that is exactly the behavior of something that has become bearish. That's it. I mean, it's just all these, most of them anyway, all of the XLs are screwed. Like, that's very screwed, at
Been
least in my
difficult.
opinion.
Yeah, it's gonna be.
Utilities, oh my God, that looks like it's done.
Yeah, didn't that have big topping?
It's like double top within a double top.
Let me see that one.
Almost at a 1272 from the COVID crash, pre-COVID crash high to the COVID crash low, but it just was maybe like 20 cents off or something. But yeah,
XLU.
what a massive uptrend. But yeah, just topping, like no longer making higher high, higher low, higher high, higher low.
Oh
Now it's
yeah.
making
Whew.
same high, same low. So you're clearly seeing buyers are stalling out on utilities.
I'd say the chance of that going back to retest the bat pattern. So on the daily, look, here's another looping type 2 coming in because there's your type 1 move. Beautiful bat pattern. Even though this went past target 2, okay, you're about to end the reaction by taking out that trend line in the
Yeah.
same way you did it back here in the beginning of the year. And look, yeah, you would initially say, if you were on this side of the chart, you'd say, wow, that's going to the moon. But no, you came all the way back down for the type 2, both of them, and did another pattern. So, don't be surprised. Don't try to run to utilities for safety now. It's a little
Yeah.
late for that.
It's way too late. It's like over. Like, this is the dumbest time. I mean, it's almost like
And
looking at
there's one.
ExxonMobil or an energy stock and being like, this is probably the lowest risk area ever to take profit or to reverse,
Yeah.
right? I mean,
That's
just
and
because everything's going to correlate to one when the volatility increases, right? Because there's accumulation on volatility. It's eventually going to do the crazy thing. And not just gold and Bitcoin and, equities, utilities too, that have been unbelievable this year. It's like safe haven. It has been, but that doesn't mean it's going to stay that way.
back to 65.76. And
That's almost like right angled and ascending, broadening formations, which is really bearish. Like, the psychology is kind of weird. Bukowski talks about it, where you have like this horizontal line, like this base of buying, and but you keep making higher highs every time you hold that horizontal line support, and it's not bullish at all. It's a bearish thing. Like, if you take out the channel, and I'm just talking about kind of something like this. Let me just show you real quick. It's just that it's like this type of behavior. This is what semiconductors, this is exactly how semiconductors ended everything. It was easily identifiable too. And a couple Euro funds did the same thing.
let me see that.
It's just like that type of behavior where it's just like the
Yeah.
horizontal, right? I mean, that's bearish, super bearish. Sorry, my lines were a little off on that. Let me just repost it. At least, it's not
Yeah.
perfect by any means, but that's not. And now, if you're looking at it that way, what's just happened is what buyers have failed to see the top of that trend line. So it's a potential partial rise. Which, if we see the that horizontal base of buying again, that buy wall at $64, if you see that one more time, that's a confirmed partial rise, and there's a 70% chance of a bearish breakdown. If you're below 67.89, I would not be surprised.
That's a good chart right there. Look at that double top.
Yeah, it's nasty, man.
RSI's doing a nosedive. Yeah, go back even at a minimum, go back to 71 and just retest that trend line. There's so many overextended things here that are
Hmm.
not doing, they're doing things to set up to go come back and retest. Yeah, that's a beaut. That lines up with, again, a couple of things we have, some bearish HSI, all of that on the XAU at 77.35 or so. Should be major resistance, and again, nothing till the mid 60s. So, and the way that that follows out with the markets, that if utilities are running, that usually means the market's running. If utilities are dropping, market's probably dropping, which you've seen that this year. I mean, look at the correction from when this market topped out in April. Was when the major decline really started across the board like that, and come back down 65, 66, something like that. Yeah, it doesn't set up for a really sweet September, but I think we just have to
Oh man, you know what
kind
that
of
is,
hang
right?
in here.
Holy crap. The XLU, that weekly, that is a dude, that's gonna be confirmed like tomorrow. That is a textbook dark cloud cover Japanese candlestick reversal right there. It's being painted right now. The one that's like the current candle that's active.
Yep.
That's so bearish. If that's respected, bye bye. Bye bye XLU. It's over.
Yeah, and
This
again, you're
weekly look.
also getting a lot of these where one more day lower, or you start rolling over. You're forming the individual bars now. You do a 1 day continuation, yeah, then that sets off the larger trend. I mean, you're up here, kind of wavering like you were back in April, with just needing like one more week down to set off the larger move down. That's just a lot of this is shaping up like that. Sorry, folks. Don't mean to be so negative, but that's where we are. That's what we're
Not
trying to
negative.
surf, and we're trying
If
to,
you flip the
just
chart, we'd be saying the
read
same
that.
thing, but opposite.
Yeah, I mean, it's just the relative position of where things have put themselves, is mostly set up for some kind of retracement pullback scenario, regardless of, unless you're a, interest rate derived, some kind of vehicle related to interest rates. Most of what you're looking at is going, rates are going to go up, prices go down. That's where we're at. Where's Nasdaq really quick right now? Let me just pull this up before I split. Um, and that gas is down 73 after being up 90 something yesterday. That
Yeah, that's crazy pullback.
Yeah, that chop. It's just, that's not really indicative of a market that's going to race higher anytime soon. QQQs, yeah.
It's not good.
Yeah, Qs are
It
down
was
here at
rallying, but
290,
it's
but but we still have 2 hours to the close, and and Nasdaq futures are down 175, and looking to threaten to go back to under 12,000. That's for the Nasdaq futures today. That's probably the whole um, big event is NQ futures. Are we going to close under 12,000 today and then go to 8 11 8? I mean, 11 8 is such a big number that by tomorrow, I wouldn't be surprised to see that happen. There's today's 5 minute chart, a couple of bat patterns, tradable, just reactions, but even something like this, where you see this happen on a 5 minute chart, and there's bullish patterns, but every one of them is just a reaction. What are you going to do in your next bullish pattern, even if it's intraday? You're just looking for a reaction, and you expect, the return, the retest, because if it goes over and over and over again, it's, not surprising to see this thing continually repeat the way it has. Not constructive for turning around the trend anytime soon. If anything, you've taken out, well, yesterday's low. Yeah, you took out the low from that initial decline at around 12,085. And again, the daily time frame, you're targeting these levels down, basically targeting hop level 11,848. That's the number. It's 200 lower, and until you get down there, you're still got pressure. There'd have to be, yeah, you need to go down there. You need to register some oversold readings, and you're not anywhere close to doing that. So I'm just going to stay and watch this thing ride the downtrend lower and retest these levels. Again, 11,848 on Nasdaq futures is huge, and S&P number, I mean, true make or break, because if you see these things slip and crack these levels where without concern, there's the daily S&P futures. This is another one that did the 1-2 on the bat pattern. We saw that on the SPY, but you're finally in this big return phase. The 1618 at 37.75, 74. That's a no-brainer. I think with yesterday's action, today's follow through, you're going to shoot that gap, come down here, and the big number on S&P under 35.40. You fail that, then you're into a much bigger scenario to the downside. And there'll be plenty of time even to take care of and take advantage of that. I just don't think anything is here that would say, all right, I'm thinking the bottom's in. I'm thinking that even the retest is going to hold. I mean, that's the whole challenge. I'll take it down to retest these levels, 3,700, and I'm not surprised to see that. If it drops another 200 and change, sure. But look at, even when I'm looking at indicators, those relative positions are in a terrible spot for, they're nowhere near hitting oversold and then coming out if that's what we're looking for in these lows to stabilize. There's standard RSI that needs to come down and register. It's a lot of work on the downside is really what I'm saying, folks. Well, Mitch, that's what I got for today. I'm gonna wrap it up. I got some other things to do, but
Yeah,
thank you again, and we, looking forward to Vegas big time. We'll have
it's
a
gonna be
lot of
fun,
fun,
man. Yeah,
regardless.
yeah. Whatever the marks are doing, I mean, I don't know. Like, been bearish in this market for literally the entire year of 2022. Once we confirmed distribution um, in March, that was confirmation with technical analysis. Um, since then, only bearish, and even more so now. Like, with what's just happened, like just before it's over, the stream's over. You just look at the Nasdaq futures that I posted to you, like what it did relative to the downtrend, that channel, that supply line it's in. It upthrusted through it in August, right? Mid August, and then broke back below it, but then just recently back tested it perfectly as resistance. So that's like an upthrust, and then the back test of the upthrust. Then
Right
the
here.
massive bearish engulfing candle came in, and now you're below the horizontal line resistance. So that's like clearly the market, right? Participants telling us everything failed, everything. It's done, and it's time to go find demand at lower prices. You see that perfect correlation of the level of the
Yeah.
supply line?
2 days ago was no doubt just
Just
devastating in
beautiful.
every technical aspect.
And now we're bearishly engulfing, and there's no support where we are. So I would see 11K probably in time. Yeah, for that second test down there.
Yep. Yep. Absolutely. All right, my friend. Well, thank you again. Catch up with you back on your stream later tonight, and I'm going to
Yeah,
be over at Mitch's. Guys, check out Mitch Ray TA on Twitter and on his YouTube channel. And again, he and I will be in Vegas in 2 weeks. So,
that's
Mitch,
right.
looking forward to it. Thanks again, man. Thanks for your time, and I'll catch you later tonight.
Yeah, man. Thanks for having me.
All right.
Be
Take
good.
care. Yep. Bye.
Peace.
Peace. All right, folks. That was a great session with Mitch. I really appreciate him always, every time that he comes out. It makes it a much better stream. He's got great insight. So, yeah, we're going to be there literally 2 weeks from Saturday. We're going to do our big event. So, for those that have gotten information on it or need information, please check in with Miss Stephanie on our Discord, or go over, check with Brad or Mitch over on his stream. So, appreciate it, folks. Again, let's just stay tuned with what's going on. I think one of the things I wanted to mention, especially for those that hung out, one of the three ideas picks that I mentioned earlier this week has worked out quite well, and it was Wells Fargo on the short side. I want to just flash this up before I get out of here. This was the whole deal. Okay, was looking for a type 2 bat pattern, which we got 3 days ago. Now we're bouncing hard back up there, but that's one of a few that I've been posting, and I'll be posting more for gold and silver members, but I wanted to highlight that there are some short-term opportunities like the Target and Uber as shorts. So I'll be talking a little bit more of them on the site over the next few days and then certainly Monday. But thank you, folks, for joining us. Again, we'll be back here. Everybody that is with us, we gave away the books, and I just wanted to highlight go to harmonictrader.com, please, and become a basic member. Everything that we worked with today was on Harmonic Pattern Collection. And you go to harmonictrader.com, become a basic member, go to the basic members page, and sign up. Send your TradingView username to hpc at sr-analyst.com. Get a free trial. Also, the eSignal platform, a lot of people have been asking me, do check that out because I think that's the Cadillac version. And it's got a lot of great bells and whistles. Again, you can try that for free. So get with the rest of the resources. Come on back on Monday, folks, 12 noon. Thanks again, and we'll see you then. Have a great weekend. As always, go get them, folks, and we'll see you next week.